Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight, as widely expected, the US Federal Reserve hiked interest rates by 50 basis points. That was the most since 2000 and flagged similar moves in coming months. US Federal Reserve Chairman Jerome Powell said 75 basis points was not something that the committee is actively considering. From that, the market moved very firmly against the greenback, and looking at the Australian dollar, broke through the level of 71.5 and now reaches its objective around 72.40. In light of the pattern, the market is now likely to stage a pause, but keep an eye on these technicals because they are firming up to a potential bullish move, and if so, could see a further rally and take out the 60-day moving average, which is seen around 73.15 and maybe even push on towards 73.70. Having held above the level of 104.85.95, the euro has managed to rally back to the objective that was looking for around 106.30. In light of the pattern, I do feel the market has a little bit more to the upside and therefore could see a push up towards 107 figure 50. However, that being said though, still be on your guard that we still have the main event coming up this week. That is the non-farm payrolls numbers, which could be a little bit weaker and may actually send the US dollar lower. After the market viewed the dollar index, which measures the greenback strength against a basket of six major currencies, dropped from 103.70 to around 102.50 overnight. Any pullback? Well, I feel the market will probably still respect that level around 104.85.95. Having much consideration in where dollar yen was viewed, the market has finally taken a down test, and that is the level of 129.60 has been taken out. And from there, from the bearish divergence that was clearly evident, has pushed it now further to the downside and could see a target of 127, figure 20, and reassess from there. I did say at the beginning of the week that I did like the way the pound was shaping up, and while it held above 123.80.90, has posted a bullish outside range day. And from the rally, now it looks to this Super Thursday, with the Bank of England expected to hike rates by 25 basis points. If the statement is somewhat hawkish, then we could see a further rise up towards 127.5 as a new objective. I felt the market had overstretched itself for sterling Kiwi, and as we can see, the market has taken quite a heavy tumble overnight, and from the drop from 194, still on track for a challenge of 191 and reassess from there. Having taken mini tests at that level of 1,847 to 52, we're seeing a little bit of momentum coming back into gold, and now slowly taking its ride back towards 1,900. Keep an eye on this pattern. I wonder if the market can actually sustain if it does stretch towards 1,915 or drop back towards the bottom side of its range, as I mentioned, 1,847 to 52. And finishing up with oil, the market's just popped over the level around that 106. Let's see if the market has potentially further gains due to the fact that the midway point on the RSI was rejected, but I'm keeping a very close watch just in case we see another rejection around that recent high, which is around 108. That wraps it for the morning. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the morning.